Let's take a closer look at the markets with Barton Biggs, a legend in the business who founded one of the first established hedge funds, Fairfield Partners. He's currently managing partner at Traxis Partners. He was bullish about the recovery last year, joins us now on the phone. In fact, he called that March 2009 low. Barton, good to have you back with us. We are down 10% since the April 23 high on the S&P 500. You're not getting nervous in this market?
Sure, I'm getting nervous, but I think it's ridiculous. I mean, I think everybody is just because they are nervous, and because we and everybody else are very apprehensive about repeating the mistake we made in 2008 of not taking one of these things seriously enough. And we know that it would be very bad for our businesses to have another bad year like 2008. In other words, not to protect capital in a bear market. And so everybody is saying, "Oh my God, this could be terrible. Europe might blow up, so we got to head to shore." And I think the chances of Europe blowing up are very, very small. And so I think, and meanwhile, the recovery both in the U.S. and the emerging markets, and still probably in Europe, is strong and healthy. And so I think it's I think it's ridiculous. I think it's a buying opportunity. But are we buying? No, because we probably own too many stocks already.
Are you not concerned, Barton? I mean, we've been talking for months, and you've been saying Greece is one of your main concerns here. Are you not concerned that we need to ultimately see an actual restructuring, default restructuring of debt there before these problems are behind us, before the market can move on?
Yeah, absolutely, Matt. Greece is going to have to restructure its debt, and they're going to have to restructure it by 50%. And I'm sure the IMF and the ECB and the authorities in Europe know that. And that's why they put up this money to give Europe some time, say a couple of years. And when Greece does restructure, it's going to have a very serious effect on the German, French, and European banks. They're going to have to take big write-offs. And so they need time to raise more equity capital, to provision for it, and so on. But do I think this is going to bring the financial system down? No, I don't. And I think that everybody's going a little crazy here.
You don't think it is? Well, how do you compare it, Barton, to what we went through here in the United States, 2007 through 2008?
Well, I think it's an entirely different type of crisis, and the Europeans still haven't done what we did then. I mean, the European governments have not put money directly into equity in the banks. They can still do that. I'm sure they'd rather not, and that's why they're trying to buy their banks time so the banks can build up their capital to absorb the effect of a restructuring of Greece's debt, and possibly a restructuring of Portugal's debt. But they could still do that after all. And so I don't think the euro is going to break up, or that Euroland is going to collapse. And in fact, we figure that the decline in the euro that's already occurred will add about 0.8% to what Europe's growth would have been anyway.
All right, we're going to leave it on that note. Hey, Barton, good to get some time with you. Barton Biggs, managing partner at Traxis Partner, joining us on the phone.